Hi all. But I don't think we'll need coffee for this one. This is a straightforward walk through UK tax rates and allowances in the 2026-27 tax year. Income tax and allowances, applies to England, Wales and Northern Ireland. Scotland has their own slightly different rates. But the key tax rate to remember is 20%. And 20% as for income tax is known as the basic rate, and that is applied to the slice of income from 12,571 to 50,270. So that is to say you have to earn in excess of 50,270 in order to get into the higher rate and additional rate bands. And these days, a teacher, for example, will earn pretty close to £50,000. So as a rule of thumb, you can say, well, I'm going to be paying 20% on that slice of the income. The first slice of income is covered by what's called the Personal Allowance, and that's up to 12,570. Higher rates are charged at 40% on 50,271 to 125,140, and additional rates apply 45% for every pound above 125,140. Now that may seem like a lot, but particularly if you are doing your sort of business in a certain way, you may make your money and take out a dividend, and it's something of a one-off life experience that you've spent several years working towards. So it does happen, and you have to plan ahead in order to be tax efficient. The post 100k personal allowance, so if your adjusted net income goes over 100,000, your personal allowance drops by £1 for every £2 of excess income and reaches naught once your income hits 125,140. So that's a little sting in the tail. Other aspects, the marriage allowance, you can transfer up to 1/260 of unused personal allowance to a spouse or civil partner, provided they only pay basic rate tax. The dividend allowance, you can receive £500 in dividend income completely tax-free. Slices above this are taxed at 10.75%, the basic rate, 35.75% higher rate, or 39.35% additional rate. The personal savings allowance is also useful. Basic rate taxpayers get £1,000 of tax-free interest. Higher rate taxpayers get £500. Additional rate taxpayers get naught. Trading and property allowances, you can earn up to £1,000 from casual small trading and an independent £1,000 from gross property income before needing to report it. And there's also useful relief in renter room relief. This is a tax-free limit of £7,500 a year if you let out furnished accommodation inside your primary home. So then we come on to capital gains, ISAs and pensions. Capital gains tax exemption. The annual tax-free capital gains tax allowance is £3,000 for individuals. Gains above this are taxed at 18% basic rate or 24% higher additional rate. The annual ISA investment limit, you can save up to £20,000 per year across all cash or stocks and shares ISAs to completely shelter your investment growth from taxes. and the pension annual allowance. The standard maximum tax relievable pension contribution is £60,000, or 100% of your relevant annual earnings, whichever is the lower, subject to tapering rules for top-tier earners. So those are the headlines. If we now sort of turn to our tax cards, there are a few other heads up as we go through them. So income tax, I think we've covered. Income tax allowances, I think we've covered. Inheritance tax, the first £325,000 of an estate is taxed at nil for chargeable transfers in 2026-27 and 25-26. But given the value of the average home, particularly in the south of the country, you can see a little bit of prior planning for inheritance tax can save a lot of tax. Now, of course, this inheritance tax tends to happen when people are perhaps at their less communicative as we age. That's an inevitable consequence of aging, and sometimes families can get quite remote, particularly death and the subject of income tax can tend to be a bit of a taboo subject. But a little bit of prior planning, a little bit of awareness can reap big benefits. And it is, of course, absolutely vital that family communication when it comes to inheritance tax should be clear as possible, as simple as possible, and where possible, the executors of a trust should be the beneficiaries. And of course, there are all sorts of family situations, but that's a little word on inheritance tax. Car, van and fuel benefits is a whole video of its own. That is pretty complex these days, because public policy on net zero and electric charging and so on is what it is. Certainly, again, there's a thing to watch out for if you run a van through a limited company and you go diligently off to work every morning in your van and you're operating through a limited company. In 2026-27, there's a van benefit of 4,170, so you need to bear that in mind, and a van fuel benefit of £798. So you need to perhaps have a little think about that. Stamp duty, land tax, again, a bit of a world of its own, and applies to land and buildings in England and Northern Ireland. For the basic, if we look at the first slice of residential band, it goes from 0 to 125,000, and the rate is 0. For a non-residential band, it's 0 to 150,000, and the rate is 0. So that stamp duty, land tax is worth looking at. National insurance has come much more to the fore, and there have been some pretty big rises in national insurance. And Class 1A for employers is now 15%. So that's a pretty sizable tax burden, particularly as the minimum wage has been going up. For the self-employed, Class 4 for the self-employed, 6% on profits between 12,570, you'll remember that from the personal allowance, and 5270, again you'll remember that from the threshold. plus 2% on profits over 50 to 70. But the state pension continues to be the best investment you can make. So making sure that you're making those minimum national insurance payments is absolutely vital for your long-term financial planning, because time goes by very quickly. Capital gains tax we've covered. Business asset disposal relief, the first £1 million of qualifying gains are charged at 14% for 2025-26 and 18% for 2026-27. Value added tax, I think you probably know, if you're liable to value added tax, you probably know the landscape of that. From the 1st of April 26, the standard rate is 20%. The annual registration limit is £90,000 and the annual deregistration limit is £88,000. So there was quite a bit to do on that single page of the tax card. Corporation tax, is a less glamorous topic. Profit limits are reduced for a company with associated companies, so it's well worth keeping an eye on if you're an enthusiastic former of limited companies, working out how many companies you control so that you don't end up losing out. For the years to 31/3/26 and 31/3/27, the small profits rate in the band from 0 to 50,000 is 19%. And the main rate in the profit band over 250,000 is 25%. Capital allowances are still very important. You have to watch capital allowances on cars because they tend to be very restricted to net zero policy. First year allowance on certain plant machinery and cars of 0 grams per kilogram is 100%. So that's well worth looking at. Corporation tax, first year allowances, full expensing on certain new unused plant machinery. Again, the end of year reviewing that, whether to renew the assets. And the writing down allowances apply. Long life assets, integral features, buildings, cars over 50 grams per kilometre is 6%. Pensions we've covered, but that has its own complexity, so you really need to speak to a financial advisor on that. The individual savings accounts we've covered, and various rates. The new state pension is paid at £241.30 in 2026-27, and that, as I say, that's a very valuable benefit. The national living wage, national minimum wage, so age from 1st of April 2026, if we're looking at someone above the age of 20, you're looking at £12.71. Tax reliefs for individuals, enterprise investment scheme, seed enterprise investment scheme, they're still there. Venture capital trusts, for those applicable, is still a thing. So I think we've had a good gallop through the tax cards, and I hope you found that helpful. And any questions, if you'd like a copy of the tax card, just give us a buzz. Many thanks.